if you wake up tomorrow and see that the price of gold has suddenly shot up by $200 an ounce overnight? People rush to buy gold coins, jewelry stores hike prices, and news anchors are all talking about gold at record highs. But here's the big question. Why does the price of gold rise in the first place? That's exactly what we'll be breaking down in today's video. We'll also explore how gold prices move, what factors make the prices go up, and most importantly, why investors around the world treat gold as the safest asset to hold. Don't worry, I'll keep everything super simple and easy to understand. So without further ado, let's get right into today's video. Well, gold is not just a shiny metal used for jewelry. For thousands of years, it has been considered money. Before paper money existed, kings, traders, and even ordinary people used gold as a store of value. And even today, in modern times, gold still plays that role. Unlike paper money that governments can print more of, the supply of gold is limited. That's why people call it a safe haven asset. When things go wrong in the world, like wars, financial crisis, or inflation, people turn to gold because they trust it to hold its value. When the value of paper money falls due to inflation, gold becomes more attractive. Think about it. If your $100 buy less today than it did last year, you look for something that can protect your money's value. That's gold. For example, during high inflation, people buy gold as a hedge, and this increased demand pushes prices up. When interest rates are low, keeping money in the bank doesn't give good returns. In such times, investors prefer assets like gold that can maintain their value. On the other hand, when interest rates rise, gold sometimes slows down, but not always. Wars, pandemics, and political instability often make investors nervous. When people fear stock markets are crashing, they buy gold because it feels safer. For example, during the 2008 financial crisis and the 2020 pandemic, gold prices rose sharply. Central banks like those in China, India, and Russia buy huge amounts of gold to diversify their reserves. When big institutions buy gold, it increases demand and prices naturally climb. Gold mining is expensive. If costs of mining rise, gold prices also tend to increase. And since gold is limited, its supply cannot easily expand to meet rising demand. History shows us how gold reacts in times of crisis. During the 2008 financial crash, banks collapsed and the US housing market fell apart. Investors rushed into gold, sending prices even higher. The same thing happened in 2020 when COVID-19 created global lockdowns, job losses, and uncertainty. Gold soared to record highs above $2,000 per ounce. More recently, in 2022, the Russia-Ukraine war triggered geopolitical fears worldwide. Again, gold prices climbed as people searched for a safe place to park their money. Gold continues to play an important role in the modern economy as well. It acts as a hedge against inflation, meaning that it protects purchasing power when money weakens. It also serves as a safe haven asset when stock markets tumble or currencies lose value. The global demand of gold remains strong, not just from individuals, but from countries and banks as well. And since its supply is naturally limited, it holds its value better than other assets that can be created endlessly, like printed money, for example. Well, gold is a smart addition to a portfolio, but it's not perfect either. The biggest benefit is that it protects your wealth in times of uncertainty like inflation or other crises. It also provides a safety net when stock markets are risky. But on the downside, gold doesn't pay interest or dividends. Its price can also be volatile in the short term, and if you buy physical gold, storage and security can become big issues as well. That's why many experts suggest keeping only a small portion of investments in gold, around 5 to 10%, while keeping the rest in stocks, real estate, or other assets. The key is to have a diversified portfolio. So quickly, why are gold prices rising? Well, it's mainly because of inflation, weak currencies, global crisis, central bank demand, and the fact that the supply is limited. Gold has always been and will likely always be a source of wealth and security. So the next time you hear that the gold prices are hitting new highs, you'll know exactly why this is happening. And here's a final thought. Gold is not just about money. It's about trust. Across centuries, people have trusted it to hold its value, and that trust has made gold shine continuously. This is all from my side for today. I hope you found this video helpful, and if you do, make sure to give it a big thumbs up and subscribe to my channel for more financial insights. Thanks for watching.